Let's bring in Jeffrey Small, who's going to join us to look at the markets today. Specifically, I want Jeffrey to look at Apple and Amazon, which report late this afternoon. Start with Apple. Everybody who's got any shares who's in the market surely has a small piece of Apple. So this thing counts. What do you see happening this afternoon?
Well, we see an earnings decline for the fourth quarter in a row, Stuart. And, that doesn't change the fact that Apple stock has gone up 50% year to date, but it's only 10% above its all-time highs. And so this is a great opportunity for investors to buy Apple, that when the mega cap rally comes back to find its legs and earnings per share finally start to increase by way of Fed action, it's time to buy Apple on these dips. But let's not forget that they're also reducing 4% of their float on an annualized basis. They have a very aggressive share repurchase policy there.
Where do you see Apple going? If you're right, and there's a dip here, and then the mega cap rally comes back, where does Apple go? Substantially above 200?
Well, I think when it gets its earnings back next year, the earnings projections for next year are 2024. So this is one of those really rare occurrences where their present earnings don't really matter. What the street really wants to know is what's the guidance look like? And right now, the guidance looks like 10% growth for next year. With their buybacks and lowering rates and continued expansion of their sales and the emerging markets, what we see happening is a price probably runs to 225, 230 by end of year next year if they meet their guidance. As far as the market goes right now, though, we know it's very overheated. Things have risen quite rapidly. And right now, everybody's bracing for a little bit of consolidation and some pullbacks, which are happening as we speak.
Okay, give me 30 seconds on Amazon, because they report, and I think you've got a target price of $150 a share. 30 seconds, sir, go.
I do, and Amazon's got almost the same problem as Apple, except their top line number is growing, their net earnings are not, so we expect them to report a flat net earnings result today. Once their earnings per share start to increase, now is a great time to buy Amazon because they're 40% below their all-time high. And so there's a lot more room to run on Amazon as their earnings will change when rates drop and they stop the continued expansion expense from all of their warehouses and investing in their business. So next year, they'll right the ship, but their projection for earnings next year, Stuart, is very, very big. They're going to have a huge turnaround in earnings next year, and now's a great opportunity for Amazon to get involved and buy the dips.
Jeffrey Small recommending dip buying again. I like to hear that. Jeffrey, thanks very much for being with us. We'll see you again soon. Thank you.